Hello and welcome back to another video. Justin here, and in this video we're going to talk about Jerome Powell and exactly how he's going to be talking about his testimony a little bit later today, starting at about 10 a.m., what the charts are going to do and how we can be prepared. Let's jump straight in. So Jerome Powell, we know this guy has a tough job. Right now he has a lot of stuff to go through and he needs to craft a narrative to tell us exactly what's happening. This is a little bit unusual, but we did have some headlines that crossed before he actually gives his testimony at 10 a.m. So again, as a reminder, he talks at 10 a.m., usually talks for a couple of hours. These are headlines that crossed before. This literally came out about half an hour ago at about 8:30 Eastern. Wages are rising at the fastest pace in many years. Price increases are spreading to a broader range of goods and services. Fed expects inflation to diminish this year. Fed is attentive to high risks and higher inflation. So that's pretty big. Those are pretty big headlines right here. Let's look at the next one. Then I'll tell you what it all means. Rate increases should be appropriate in 2 weeks. Cool. That means liftoff. Implications of Ukraine war on U.S. economy are highly uncertain. That's what we think too. Fed will monitor Russia-Ukraine situation closely. So between all of these, what does it tell us? What it tells me is that Jerome is aware that the landscape is changing. He's communicated that inflation is no longer transitory, that it is spreading into a wider way than he originally expected, and that he still expects that it's going to cool by the end of the year. So what's going to really matter now is that he's going to have his prepared remarks coming in at 10 a.m. And then when the Q&A starts, that is when I am going to really pay attention. Why? They won't be prepared remarks. He's not going to be able to control the messaging on what he says. Some people like him, some people don't. The people who like him are going to give him softball questions. The ones who don't, they're going to try to throw a hard ball. They're going to try to throw a curveball, and they're going to want to try to trip him up. Remembering that he is still not actually confirmed as being the renewing Fed chair. So now let's look at the charts and see what it means. Like I mentioned about 30 minutes ago, we got that headline from Jerome Powell. So what we can actually do is look at the chart. This is going to be the E-mini futures or the ES1 on the 30-minute chart. So we can note right here that this is right when those headlines crossed. It's right here. So you wouldn't even know that Jerome Powell said anything. Why? You barely see anything. So what's really important is that, again, roughly 428 versus roughly 4305. And the reason why those levels matter is because when we look over here at the monthly chart on SPY, 428 is going to be our quarterly base. For me, it is the number one area as a threshold. So what it tells me is that right now on the monthly chart, which we opened up yesterday, we've already established a pretty wide range. The high of the day is 437. The low is 427. So that's a 10-point range. And wherever Jerome decides to push the charts, whether that is up or down, I think that the other level we established might be the top or the bottom. So technically, we got close enough to 438, and technically we got our 428 print. So initially, again, we went up, we went down, and then came right back to flat. So S&P is set to currently open up at about 431.6. And the reason why that level matters is because correction territory is defined at 432. So right now, to make it very simple for people, S&P is open up a brand new month and we have a range established. Whichever way this day breaks or the daily chart is likely going to signal short-term direction to me. Although we already have some bear clues. The bear clues are that we're trending down. We're below the 50. We're below the 200. That's really important. We're also making fresh lows. So we got a double top, right? Then we got a lower high and lower low yesterday. If we lose the range from yesterday, bearish, we're probably going to go back down to 422. If we're able to reclaim the high of the day from yesterday at 437, I would expect that we're going to be on our way to test at least the 200-day moving average of roughly 445. So now let's talk about why we would go up and why we would go down. So one more time, let's look at the this is going to be the weekly chart. The weekly chart also tells us that we got a massive dead cat bounce off our lower uptrend all the way back up here to our 50 DMA. And now we're settling here with an initial rejection. And now we're just hovering here. One thing I would really note that is very important that I was watching last night is the open from last week. The open from last week is what? Oh God, it's 431.95. So we know that the real bodies are very important. And right now, the real body on the weekly chart for last week is right where we're set to open. Hopefully you know what that means. It's going to be a pivot. It's a pivot into Powell. All right. Next thing I want to look at here is going to be QQQ. So shifting gears here to QQQ, the reason why this matters to me is because we have a death cross. So the death cross here is defined by the 50 moving average crossing below the 200 moving average. If you like MACD, it is called moving average crossover divergence, which basically just tells you what the moving averages are doing. I like looking at the charts naked because I like things that are naked. So looking here, we can note that this death cross is going to be a lagging indicator, taking into account the last 50 bars, which go back to roughly later part of December and back to 200 bars, which is going to take us all the way back to roughly May of last year. So a death cross here basically just means that the short-term price is now lower than the long-term price. It's not that complicated. If we look here at the monthly chart for QQQ, we can also get a clue in terms of where we're likely going to go. So what's happening here? Right back on the green line too, just like SPY. So what does this mean? It means that if we're going to hold up, we should be able to use the low established as a base. We should be able to advance. It should be no problem. Let's look at the daily chart now to see what it's telling us. Why? Same notes. This is going to be the daily range from yesterday is going to be the range on the monthly. And what we have here is a lower high and a lower low with a soft landing right back down on the green line. What I would note is that all they were able to get us to puke back up, meaning the bears were able to stomp us down, is only to retrace down to the close of Friday. All the previous range here has been held. That's the biggest chunk of the move. So from low to high, we gained roughly 30 points, and we're holding about 23. That's more than 2/3 of the move. So what does that mean? That's a retracement. We retraced roughly 1/3 of the move, and now we're going to decide whether or not it's going to hold. So like I said, we already have a bounce off not only the high, but a little bit lower. If this low gets lost, where are we likely going to go in QQQ? Probably back down to low 320s. That would be my base case. Let's go back to SPY one more time to make sure you understand. Here, what did we do? We bounced a little bit below the range from here. From low to high, we put in roughly 26 points. Currently holding on to about, opening at 432, about 20 of those. Again, more than 2/3. So this is quite bullish. It tells me that if the low of the month's been established, we are set to lift off. And just to reiterate, this is from the weekend deep dive, which we will queue up at the end of this video. Just looking here, we have 1, 2, 3 months or candles of massive dip buying. Note the upper wicks are small, the lower wicks are pretty big. And we open this month at 435, which means if we decide to actually go green, this is also going to turn into a tail. So we got 1, 2, 3, 4 months of dip buying. If Jerome is going to save us, he has to pretty much start doing it today. Last thing I want to look at here are going to be a couple of the mega cap companies to understand whether or not the QQQ lagging indicator of death cross is going to be validated or not. I want to look at the largest stocks in the market. So first thing we're going to look at here is going to be Aapl. And again, you should know this by now. Green means support, red means resistance, white means significant. So what do we have here? Well, we got a whole bunch of candles that don't have any real bodies. Open and close at the same price. Open and close at the same price. Open and close at the same price. It's fine. It is well above the 50. It's oscillating, but it is holding roughly 165. Aapl is the largest stock in the market as well. It is the most important stock in the market. Looking at Microsoft, number 2, Bill, also above the 50 EMA. What is it doing? It's battling for the downtrend. It is currently bouncing off the 50 EMA. It's holding most of its gains. This is a massive hammer, not a dragonfly doji like we saw on Aapl. What does this mean? Microsoft's ready to go too. If the market's going to lift off, it is ready. One that is not ready is Amazon. Amazon is still stuck. It's still stuck going sideways. It's not really doing a whole bunch, but there is potential. So again, if we can get back above roughly $31.50 or about $100 higher, this would look a lot better to me. We already know Amazon's below the 50 EMA, and the other one is going to be Facebook. We're going to go to Google next, though, because of market cap size. Again, what is it doing here? We have an inverted hammer. It's holding most of the range here with a solid hammer over the 50 EMA. It is ready to go. It is ready to support the market if we are truly bullish. Looking at Tesla, this one powered up massively this week. We also heard Joe Biden talk about, right, the want to energy independence, blah, 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 right? EVs, let's go. So Tesla should get a bump on that today if the market is truly bullish on what Joe Biden said. So looking here, again, reestablishing the uptrend here, which goes all the way back to January of 2020, July of 2020. That's a long time. Solid hammer off the lower trend, back above the 50 MA. This stock looks good. Let's look at NVIDIA. NVIDIA, strong bounce off the green line and back above the 50, and it is just throttling here, right? Just digesting basically the hammer portion of this candle. Also looks pretty good. Last one to look at here is going to be Facebook. So Facebook looks soft, right? Zuck is probably stuck in the metaverse, right? Probably stuck on the toilet, doesn't know what to do, right? Drunk tweeting, whatever. This doesn't look nice, right? It looks terrible, in fact. It is way below all averages, but there is potential for it to snap back. And how could it snap back? By getting back above roughly 208. So with that said, what I would encourage you to do is to be mindful that Jerome Powell is going to be speaking once today, but it's not the only time he talks. He's going to start talking at 10 a.m. with his prepared remarks, which we got a preview of. And then at roughly, I don't know, 10:15, 10:30 is when the Q&A will start. Usually runs for about 2 hours. And today is going to be day one, which means we're getting a preview for what's going to be said tomorrow. Whatever trend is established today, we're likely going to see continuation for tomorrow. I would also note that last night I listened to the entire Joe Biden speech. Nothing really moved us up or down. There were a couple of ticks. I was watching it, watching the charts. Nothing really moved us one way or the other. So the entire focus is going to be on Powell. I would also know, look and see, when do we tick up? What does Jerome say to make the market tick up? And what does he say to make the market tick down? If you want a deeper review, there should be a video that queues up here for my weekend deep dive in terms of how to get prepared. And with that said, we wish you all the best of luck today. Thank you for watching.